how to do it, the sort of the baseline for what to do. And then we're actually going to go in and look at adaptive and show you some of the things that can be done in terms of proactive budgeting. And you don't have to use adaptive, of course. You can use any budgeting tool that you have, but we just want to make sure you understand the kind of things that you should be doing as you think about proactive budgeting. So why is proactive budgeting really crucial? So, you know, I happen to love boating, and I thought this was a really good analogy because I said to myself, can you imagine if, I went out and I took my boat out and I had no idea what was going to happen with the weather. So, I think when we think about budgeting within our organizations, a lot of times that's how we're sort of navigating. We're planning and setting our course based on last month's weather patterns, if you will. And so, we have our budget for the year and it's set, and no matter what happens, we're not going to deviate from the course. And so, like with a ship, you could get battered by unexpected squalls, fog banks could materialize out of nowhere, storm clouds could suddenly appear on the horizon, but you don't pay attention to any of that. You don't have line of sight into any of that. And so your ship doesn't alter its course because your forecast, in other words, your annual budget, has predicted calm weather. And, you end up and could end up selling right into a hurricane or a disaster. And I use the whole idea of the ship, even with my company internally, because I tell my team all the time, you can't immediately turn a ship if you need to have a view, a forward-looking view, a proactive view in order to turn the ship because it takes a little time. It's not like a race car where you can just turn the wheel. In addition to that sort of visibility aspect, the CFO's role is really evolving. I'm sure everyone on this webinar has seen or read articles about the CFO's role and how it's evolving. And it's not just about navigating the financial, areas within an organization. It's about being on guard on how your organization is doing financially each month, but also the trending, and being a strategic visionary for the path forward for your organization. Taking the information monitoring it, and looking at the performance, and then how will that performance impact you going forward-looking, not just a snapshot. And this entails, looking around the corners on what the financial activities are that may lie ahead for your organization. And of course, the technology, we know technology is changing everything. It's changing so rapidly in the last 5 to 10 years. It's similar to the paradigm shift that happened in the early 90s when Windows came out. And so what technology may be doing and offering for your organization, or how it may be impacting your organization or not impacting your organization when it should, are all really important questions. And the CFO, your role needs to be able to have that vision, if you will, to be able to see forward, not just our typical snapshot budgeting. It's really all about having a strategic view, and more we're relying on our systems to do the financial operational aspects of it, and then we as CFOs are looking at it from a much more strategic perspective. A recent analysis of the that KPMG did, and I thought this was really telling, was they had surveyed a number of CFOs, and what they found, and they just gave them the 3 categories, and what they found was that there had been an inverse flip, entirely a shift in terms of what used to be where a CFO spent their time in the day-to-day financial operations, and then some monitoring of the financial reports and the internal controls, and then the financial performance, the more strategic forward visionary, it had flipped 100% in the other direction. And now the financial vision aspect, the performance, the impact had become where the CFOs they're now spending their time. And it was just we knew this was happening, we see this happening. I'm sure you're seeing that in your roles right now. And but this was actually quantifying it more for us. So I thought this was a really excellent, quote in terms of understanding the changing nature of a CFO's role and the importance of ongoing visibility to the impact of the things as they're happening within your organization. You really need to be able to have visibility not only to actuals versus your annual budget reports, which hopefully everybody on this webinar has right now and is getting on a timely monthly basis, but those are backward-looking snapshots of your organization's last month and year-to-date activity, and you really need to be able to see ahead and really understand how those activities are going to impact your org for the rest of the current fiscal year, as well as forward on to the next year. And this is, really all why it's hugely important to think about forward-looking budgeting, and why I embrace this so much. And I've actually, changed JMT's budgeting model to this as well. So, I actually sat down and I went through the exercise myself personally, sort of trying to understand what was keeping us from being more strategic. And of course, I, go on to all different kinds of research and resources that are available to us. I love going on to Google. And then I also found Adaptive themselves had a lot of information around this. And we use Adaptive internally at JMT, so this was one of the drivers in terms of us looking at it, how we would use it, what was the value of the investment we were going to make. And I looked at our planning processes, and they were sort of inefficient and ineffective. We have a number of different departments. We using Excel. We were sending those Excels out to the different departments, getting input. The formats were a little bit different in each one of them, even though we tried to keep things consistent. Our department heads made changes as they needed to for their specific pieces. We had to get them back and consolidate them. And then we had, the reporting and the analytics, and all of this sort of was making it hard for us to be more strategic. And when I go in and I talk to organizations, I see this myself. We lived through it, and, our clients are living through it as well. So it's hard to get to a place where you can be more strategic. And, it's really a transformation that we end up having to go through, because we're moving ourselves from a very tactical position to a much more strategic one, and right now you're probably like most of our clients, and we only deal with nonprofit organizations, and you're budgeting from a tactical perspective. And basically what that means is you're doing an annual budget. You probably invest a considerable amount of time and energy in that budget. You may be doing a mid-year review or recast. If you're grant funded, you're certainly doing budget modifications probably. So all of that is very tactical. And the whole thing with rolling forecasts, proactive budgeting, is it allows you to have that more strategic view of your organization's path forward. Of course, you have your annual budget. It's hugely important, but that annual budget is a component of your proactive budgeting process, your rolling forecast. And that's so that you can see sort of the weather forecast, using my ship analogy at the beginning, so you can really sort of plan for your organization. And here again, give you more insight into looking around the corners. And all of that, involves the building blocks that we have on this slide here. about what you need to sort of pull yourself with. These are the challenges, and how do you get from being tactical to strategic. So, and let's just whip through these particular ones here. So how do you budget proactively? Well, you do rolling forecasts, and now that I'm doing them, I love them. And so, why do you have to do them? Well, as I've been trying to really stress here up to this point, it allows you to have faster response to changing conditions. You're updating at a high level your rolling forecast, and I'm going to show you how to do that and what it looks like. That insight, and it's going out further past your current fiscal year. It allows you to have more timely decision making, because rather than hitting the storm, you can get a view of what's happening and what might be approaching, so that you can make decisions to potentially change course. And of course, that includes your improved visibility to how your different programs are performing, or your grants or your contracts. It helps your senior management, of course, and your program managers manage the performance, your key performance indicators, your impact of your different programs. And it actually shortens your annual budget cycle because you have this eye on it and you're looking at your budget. So there are a tremendous number of benefits to doing rolling forecasts. So basically, the three big, if I were to encapsulate it into the three big pieces, I would say that, number one was that innovative response, which I had on the other slide, that you can proactively look at the changes and see the impact that they're potentially going to have 6 months out or 8 months out or 12 months out. And you can look to making innovative shifts and changes within what you're doing in your organization sometimes. A lot of times it's not possible, but a lot of times it is. You also provide flexibility. It allows you to be flexible in your planning, so you're not just looking at an annual budget number on a history that's old. It's happened already. When you get the report, it could be 30 days past, it could be 40 days, it could be 60 days past, and you're now 60 days beyond what happened in that report. Here you have flexibility because your rolling forecasts are taking that information and projecting it forward, showing the impact of those numbers going forward. You also have the ability to be, here again, the forward thinking. And this is across your organization. If you have rolling forecasts, you want to have them across your organization, visibility across your organization as well. And it encourages your department managers or your program managers to be focused on what is needed to achieve your mission, rather than just hitting a fixed annual number or trying to spend time on something that's 30 or 60 days old without that forward-looking view. So how do we do a rolling forecast? What's involved in a rolling forecast? Well, typically, a rolling forecast is covering 6 to 8 quarters. So you're going out, an 18 to, an 18-month period, typically, sometimes 24 a month, and that's part of a consistency. You're keeping it high level. So your annual budget probably has thousands of line items when you think about all of the pieces and the personnel and everything that's going in it. But a rolling forecast, you're going to keep it a much higher level. Otherwise, you'll get bogged down in all the minutia, and it will just become, your forecast will end up becoming a compilation of budgets rather than a high-level view and projection and forecast. You want to have it based on your key, performance or impact. What are the drivers for your organization, rather than, here again, all the masses of detail, because you don't want it to be onerous for you in the finance area or your program managers who are, going to work in keeping it updated with what's changing in their areas. You want to have metrics. You want to include metrics, so it's not just about, dollars at a high level, but it's also got metrics. So, and they might be, depending on your organization, they might be the number of clients served, the contract grant dollars remaining, cash balances, meals, beds, whatever is important that you want to monitor for your different programs in achieving your missions. You want to give access to the staff. I mentioned this before. Here again, it's high level, so it's not onerous for your team. It's very, very high level. And then, your program managers, Program A, might be running the Meals on Wheels program for a particular region. And so the number of meals served would be important to them. The total revenue coming in would be important to them. The total expenses, are they running the program at a surplus or deficit? Very, very high level. You need to get access to the staff because their line of sight provides you with line of sight that can, impact your projections for the organization. They have the feet on the street, so to speak, on what is happening, right, in their programs. So here again, I got to reiterate that it's really important to keep it high level, so your managers will really be engaged with what you're trying to achieve here. Rolling forecasts shouldn't require and don't require the work of like a full budget, and your program managers and senior department managers, once they know that and you're showing that to them, they're going to be a lot more engaged if they know they can just zero in on a few key variables that are really important to them. So, steps. Okay, so let's hear. Let's actually look at a rolling forecast example. Now, this is just this is not what your rolling forecast should look like. Your columns are correct, but the rows, I'm simply showing you here how a forecast changes as each month's actuals are brought in and new months are added. And this ensures that you're always tracking 6 to 8 quarters, right? So you're basically, you have your original budget. Your rows might be your revenue. And depending on what you wanted to build your rolling budget out, you could build it, as here I said, keeping it at a high level. You could say, I want to track revenue with my rolling forecast. And so your rows might be revenue by donor or grantor or contract. And your expenses might just be a personnel, direct and indirect, and then a line for your metrics. And that might be, you might have 6 lines in total. As the month actuals are accomplished, you're updating the month actuals, and then the system will show you, here's how I'm projecting out, and here's the impact as I add in each month's actuals. Here's what the impact is going to be on a rolling forecast going out. And here again, as I mentioned, the 6 quarters, we recommend a minimum of 6. I prefer even 8. It's not, you're not writing anything in stone. It's giving you visibility out further. The key here is you want to have visibility to the changing environment as you're accomplishing things each month, and what decisions do you need to make if you see that you're 4 months into your year. And remember, you're adding months at the end, so as your actuals come in, you're adding additional months so that you're continuing to have that 6 to 8 quarters of information, as you're seeing this adding in, if you're seeing a trend as your actual month activity closes and as you become aware of information. So, for example, a program manager, they're seeing this. They're seeing their program, their revenue, high-level expenses. They know they have to make personnel changes. They are anticipating some revenue changes. You're updating this rolling forecast for the impact of those changes as you become aware of them. And this helps to provide you the visibility that you need for making strategic decisions. And here again, you can sort of get a sense of how this makes your doing your annual budget much easier, much more streamlined, because you're getting more visibility during the year to what's happening. So instead of spending time reviewing what's occurred in the past, you can look forward and see what's happening. So the very first thing, questions I get all the time is, can I do this in a spreadsheet? And I always tell organizations, really, you can do just about anything in a spreadsheet, as we all know, because we use them constantly, but it is not a good plan. Spreadsheets are not a good tool to use for rolling forecasts, since you need to be able to quickly and easily adjust and model the various scenarios, especially with adding months and all of that kind of great stuff, and when you're pulling in information. That's where the consolidation component comes in. If you're like most organizations right now where you're using Excel to do your annual budgeting, I have no doubt that you are dealing with the struggle of spending time consolidating the information. You probably have your spreadsheets and they're scattered across your organization like, islands across the ocean there. You have sheets for, your different departments, fundraising, development, your program. You might have revenue, grant management, contract management sheets. You have sheets for departments and finance. And so you're probably already dealing with this challenge. You know what I'm talking about. You have different programs and departments, and they usually have different assumptions and standards, and you're setting them a template, and they're trying to work within it, but they might be adding things, and it kicks back to you, and it's very difficult to combine and consolidate the forecast. And then when you think about a rolling forecast, that's a budget scenario. When you think about a rolling forecast and what you're trying to do there, and it's meant to be a dynamic tool, it's really not a good plan. The other piece is that 90% of spreadsheets really contain errors. The ACCA, that's the Association of Chartered Certified Accountants, here again, they did a survey, and it came back, and almost everyone came back and said, yes, they'd had, errors multiple errors, serious errors in spreadsheets. So, I'm not a big fan of spreadsheets for any kind of reporting or anything, and especially when you're this tool is supposed to be for really being able to manage your organization going forward. It's really important. Then we also have the multiple scenarios, and here again, the whole point of a rolling forecast, proactive budgeting, is to enable you to do scenarios. So that is really hard to do and maintain and update in spreadsheets. And the scenario example might be, if we get this grant or this contract, here is the impact on our organization. With the grant or contract, new program, whatever it might be, without the grant or contract. If we got funding cut 20%, what would the impact on our organization be? That kind of scenario planning is very, very difficult to do in a spreadsheet. So that's why I'm a real big proponent that you really shouldn't attempt to do this if you're thinking about a spreadsheet, because it's going to be a huge job. So now let's actually go in and look at some proactive budgeting in action. So Brian, are you on the line?
I am. Thank you, Jackie.
Okay.
So let me take it away. Let me transition, if I may. All right. Good morning, everyone. First, you just want to make sure you see my screen. There's the Discovery dashboards and Adaptive. So today what I'm going to do is, you can? Okay, great. If anyone has any issues with hearing me or the screen, just put your hand up and we'll make sure our connection is good. So, so I'll move forward. So just to give a little setup of what I would like to kind of elaborate on what Jackie spoke about with regard to rolling budget, is I'm going to walk through a scenario. We've gone through January through March. We have our actuals in there, and then we have our forward-leaning budget. And April rolls around. We want to be able to refresh our budget, so we have January through April actuals, and then the remaining budget periods. And we're going to look at a particular program, and we'll see that in action there. But first, I've signed into Adaptive Insights, and I always like to make Discovery my landing page, and you can always choose where you land. But, as Jackie was talking about, you really want to be able to view things at a high level initially, and this is where coming right in here into Discovery, you had that capability. And with the Discovery charts and graphs, you have just really unlimited types of flexibility. And we'll just talk a little bit about sort of what we're looking at here in some of these charts. So we're seeing here a net income actual versus budget. So we see something's happening here in April, and I think when we go through my example, we'll take a look. If we continue along, we've got a couple other types here. We're comparing expenses. We've got a legend down here, and we're looking at budget, et cetera. We've got a nice little pie chart here breaking out donations by type, things of that sort, and then a P&L scored card here below where we're kind of just tracking revenues and expenses, comparing it between a given period. And you can, of course, just drill in particular month, quarter, things of that sort. But if we maybe look at this particular line chart as an example, again, we see that it looks like something is probably happening here in April with these are individual donors represented by the blue line, and perhaps there's tax season gone by, a little bit of a drop off. So maybe we'll see if we can figure out extrapolate what may be happening there. And of course, we can just click on there. We can choose Explore Data, and let me move this out of the view. Anywhere within Adaptive, you have that type of flexibility. We can drill down and kind of see what's driving those figures. And when we go to the supporting schedules, we'll talk more about it. Continue to drill down, and we can kind of see some of the details that's making up that donor revenue. All right, so next what I'll do is really what the meat and potatoes of what we want to talk about is really how we're building up our budget. So if we come back here to Adaptive, we scroll over to Sheets. There's numerous different types of modeling sheets, but today we're going to focus on donor revenue. That's really where we're going to build up our budget. Statement of activities, we're going to see how it all rolls together, and we'll take a look at perhaps personnel as well. So let's go over here and take a look at the donor revenue sheet. So I've opened it up, and it's a really useful sheet because it gives a lot of the dimensionality that's particularly important for nonprofits. So here, what we're looking at right now is we have a column that's showing your GL accounts, showing donor type, and here we've got little drop downs, etc. We can select fund, location, then we can enter the value. So because we've already gone past the set period, we could come in here and we could adjust our budget accordingly and be able to navigate courses needed. So if we look here in the upper right-hand corner, this is the example we're going to work with today. It's called Program 1. But I clicked in this drop-down. I want to illustrate this to you, is that, this is where adaptive really provides easy consolidation or aggregation of data. I can enter data here in this Program 1, and it will roll up to federal, operations, division, and total organization. And that all happens automatically. So why don't we just walk you through an example of adding some data. And please, if there's anything that isn't clear as I go along, feel free to raise your question and stop me, and I'll answer that. So here I'm just coming along here. Very easy. I can add really unlimited types of dimensionality to capture these details, and we can even New York. We could choose an international entity. We could put some notes in here. Let me scroll over here to the right. We could say we could project here a $10,000 donation. Maybe we think we're going to get 10,000, but we're not quite sure. We might get it spread out over the year. Adaptive also does provide a great functionality called breakback. Here we can choose to break back by different types of prior year actuals, or in this case, we'll select evenly, which will spread it out over 12 months. So that's what we've done. So now, we have our budget details in here. Let's go to the statement of actuals so we can see how this all summarizes up. And really the value of adaptive is that you're entering your data once, and then it's integrating back to your related schedules. So if we go back here and if we choose statement of activities, click on that, it comes right here, the summary of your P&L. If we look here on the left-hand side, we see your GL accounts. We've got revenue, and we can minimize this, and we can plus it. You generally want to start out looking at it more of a high-level view. So in this case here, we can leave it like that, and then we can just expand. And in this example, since we're looking at program revenue, why don't we navigate over here and see some of the details. You do see we have green values here in the fiscal 2014 column all the way through March, and that indicates actuals. If we just first took a pause and we went down to the bottom of the sheet, you see that our income is doing quite well, and even going forward in our April budget period, we're projecting $584,000. And note, as Jackie said, we're rolling this out to future periods. So everything is looking good, right? So, and we come in here, and if we go to the donor revenue example, if we click in there, if you notice, there's actually a little purple tick mark in the lower right-hand corner. So what that's indicating is that that's automatically pulling over back. If you toggle back to the donor revenue sheet, we can see you've entered it here once, and then it's automatically synchronizing over here. So, we've come along, and April's passed us, and now we need to update this accordingly. So I'm going to go back in here and refresh this. So again, we're back. We're looking at program 1. We've got operating revenue and expenses. Now if we toggle along over to April, we see, oh, wait a second, now we're actually projecting for a loss of $117,902. And where we can actually see is, we're going to take a look at reporting, but there's some capabilities that you have within the actual sheet itself to kind of do some comparative view. So if we go up here to this, it's like a little funnel, scan that funnel. All right. So let's go back to the statement of activities. And here we were again. Okay. So scroll down in our example. I was saying we are showing now $117,000 loss. I was just about to show you a comparison. But before I do that, I want to step back for a second and talk a little bit about how this sheet works in addition to the GL accounts and the levels. If we look here in the upper right-hand corner, this is a drop down, and as Jackie was saying, we have part of the thing with your rolling budgets is you want to be able to create multiple types of scenarios, and this is where you have that capability. You can build that out. We took a donor revenue, but we have other areas. For instance, if we looked at salary and wages, we could either choose a right-click, choose Explore Cell, and we can drill down. And given the fact that I'm an administrator and I have salary permissions, I can actually see the employees that are building up that value itself. But you also have the flexibility that maybe you don't necessarily want to be able to do direct input, more high level. Here you could come in here and say equipment rental, enter a value here. We can then right click that value. We could either say copy to end. We could do, and if you'll see, there's a lot of functionality similar to Excel. So we could choose to increment this by a given percent, and we see how that spreads all the way along. And we also have, back to that, as I was saying before, you can break back this in an even or proportion view. Just a few other things I wanted to point out before we move along is we go back to Explore Cell. Anywhere within Adaptive, you have a really robust audit tracking, which you don't, of course, have so easily with Excel. So I've drilled along there, and we see that earlier today there was a $10 million entry put in here and a note, and it looks like it was me. I was the one who did it, and I took it out. So you have those capabilities as well. Let's toggle along and show back to what I was saying about doing comparison of views. So if you go back to this funnel, and also within here you have selections. You can choose your point of view if you want to see it all monthly, quarterly, annual. It's all your choice. So we're going to compare versions. So I'm going to click version comparison. And here you have multiple versions you can compare. So I'm going to say, well, let's look at actual, and let's look at one of the budget versions. We'll do that. We'll say apply. Before we do that, there's also this kind of a neat, they call them spark lines. You can choose them as well to see some trending of your data. I'm going to say apply. Save my last entry. That's my little warning pop up. And there you go. So let's see if we can scroll over and take a look at April. Scroll over to April. So what we're showing here is this is the actuals column, and you can see the legend down below. So you're looking at $224,000 in the donor revenue example. And in the purple column, the $650,000 we can see the budget. So this is really, you can kind of see this is what the fallout was. What happened in that area as well. So, this is a pretty useful, and then we've got these trends here as well. Just a few other things here, and then we'll take a look at the report. Is, there is a capability to come in here and add a note. Currently, I put a note in here already. I wanted to say, well, what happened? And in this example, we lost funding from the example Bill Gates donations. We also can put a global note on that sheet that can kind of just say, anything that might be. So you have all these really robust capabilities to be able to track. And all right, so we're showing a comparative view of actuals in a given budget version. I think now what I'll look to do is actually show you, before we move along to reports, is started talking about personal salary. I thought it would be worthwhile to actually take a look at another sheet so you have an example of how you can also build in other types of expenses within Adaptive. Let's open up this personal sheet. Now, again, security within Adaptive is very robust, so if you do not have permissions for salary level details, and you would not, of course, have access to this sheet or the levels. So within here, we can see how you can actually build up your personal budget. If we look at this particular example, William Clark in the New York office, we can see that, well, we can actually allocate him out into different areas. So you do have that capability. We can continue to scroll over to the right. You can build in benefits, fringe, raise, pay rate, etc. So you really have a pretty flexible ways of how you could choose to build out your personal modeling. All right, so let's move along and take a look at reports so you can ultimately see how your rolling budget is looking. So we can scroll down here to reports. Okay. So we have just numerous types of different reports here, but in this example, we'll take a look at a few, and we'll click on this one, rolling budget report. Now, a lot of these reports are parameterized. So in other words, you build them once. Anyone can come in here if they have access for these levels for the roll-up, and they can share report, and it's all self-service. So given the fact that we're looking at Program 1, we'll leave it at that. We want to look at this particular version, and we'll start as of April. And we're going to say choose run the report. So I ran the report, and this gives us a nice 12 rolling month view. Here we've got, we can collapse this, revenues and expenses. We can even then come in here, we can expand, we can go back to donor revenue, we can drill down on any of these numbers within here, continue to drill down, so I can immediately get back to the details of that value. Very helpful. So here we're looking at April all the way through March, and you see this reference here. This indicates a note reference that we have down here below, so you can have an easy way to track and manage any notes on your budgets as well. And then we also have here on the right that's giving you a rolling 12-month monthly average as well. You can go back to reports, choose a couple other ones. This one. So we're going to leave it here at that. It's really comparing Program 1 against two different budget. So this would be good. And back in the scenario, if you're doing different types of scenario planning, here we're actually, we've got a prior year annualized actuals, and in this particular scenario, we've done two different types of scenarios. So now we can kind of just come in here and see the variance and the variance percentage. We can see grant A. In this scenario, there's been some increase. So we can kind of, again, drill down and find what's driving that. So I'll pause for a second. I know I threw a lot out rather quickly. Want to make sure I do take time for any questions, and so maybe I'll just pause for a minute and see if anyone has any questions on what I may have discussed so far. Okay, so I think then, we'll go back and let's take a look a little bit more in these sheets because I moved along a little bit quicker. Go back to the donor revenue sheet, and you can see I have multiple tabs open, and move this tab view. So, we need to continuously update either here or directly in the statement of activities as a given actuals period has gone by. I started putting data entry in here. I did not save it. I probably want to then, come out here, and now that if I'm in the May period, and I could put in, again, we're just looking at donor revenue. Make sure we save this. We can go back to the statement of activities. Here, the one without the. I'm going to come in here and I'm going to refresh. Scroll over to the right. You notice we updated May 2018. Don't see anything here yet. Adaptive is just simply come in here and we're going to refresh. That's what you would do. You'd bring in your actuals, and there it is, automatically synchronizing and pulling in that data there. So I think it's really a useful tool. It's really, an adaptive. You have these capabilities to change course. As we showed in this example, we were trending, have a pretty high net income in April, and then we ended up having a loss, and then we can change the course accordingly. All right, I think that's what I have. If there's any additional questions or things you would also like me to go over, feel free to let me know.
Thanks, Brian.
Thank you.
So what we wanted to do in showing you a little bit there with adaptive was so that you could sort of see what you need to have, the kind of functionality you need to have when you're looking at working within adaptive and trying to do rolling forecasts. It's quite a bit involved, and it's really key to be able to see what it is that you're working on, being able to change things quickly, update them, and generally be able to do the different scenarios that we talked about. The personnel changes, Brian showed you a little bit on the personnel sheet. And all of this can be broken down by the departments and then be able to be consolidated and to give you that forward-looking view. So are there any questions that anyone has, any more information that anyone would like about the rolling forecast? I'll be very happy to provide you additional information, answer any questions you have. All right, well, if there are no further questions, I want to thank you for joining us today. We will have additional information we will be sending out, and of course you can feel free to reach out at any time. And thank you for attending. Bye-bye.